Hi, I'm Beatrice Palmer from macrobeat.co.uk. We had quite a heavy data week for once this week, and today we obviously have the pinnacle with the non-farm payrolls later this afternoon. For once, I really want to leave politics a little bit on the sideline and want to really talk more about the sort of data surprises that we've seen between the US and Europe. We did start to see the US economy starting to slow down on the back of the increase in numbers on the COVID side, and that is really starting to manifest itself in the data. So the first slide I really want to show today is exactly that. This slide is the EU versus US price index. So as you can see, in June, we sort of bottomed out where the Europe data started to get better, and on the flip side, the US data started to get worse. That's about the time when the euro dollar started to rally. This is about the time when actually euro dollar accelerated and dollar started to get into real trouble. I think this could really continue into autumn. I think the US really possibly screwed up the way they handled COVID, and it shows in the economy. While sadly, instead of US economy being on top, we suddenly actually see the European economy outperform, which I think will manifest itself continuously in FX. On the next slide, that's just a quick one. This is the satisfaction index. This is going to be something to watch as we head into the election. So obviously we are on sort of multi-year lows in terms of how happy US are, how things are going in the United States. I just want to sort of bring that one in, as this will be one we're going to be watching into autumn. The next slide, this is the dollar index. As you can see, a real follow through on the downside now in summer. And if you just think back on this EU-US surprise index, this is really the result that we see in the dollar index, almost hitting these 91.90 levels, the next big support. I think we might see a bit of a correction for the time being, which I see on the next slide. This is the monthly euro-dollar chart. We just failed to break above this 118 into the close end of July. We traded up to 119, but came off below 118 again into month's end. So we didn't create the month's end close above that trend line. I think some corrections would be due now. I would not be surprised to see euro dollar trade back to maybe 116, but I don't think much lower. I think with looking at the surprise index again, with the US suddenly going from outperform and to underperform, I wouldn't be surprised. And I've changed my euro dollar target, which was at 118 at first. I changed that to 125, and I think we're going to get another leg down in the dollar. Well, the next slide is gold, the star performer, breaking to new all-time highs. The circles you see is, the first circle you see is 2008, QE by the Fed, zero interest rates that created that massive rally in gold. The second circle you see is the sort of similar situation back in March, and gold actually starts to now accelerate as well. If I go for the same percentage moves, what we had in 08, which may or may not be true, we're talking about a 2,400, 2,500 target for gold on this leg higher. So gold continuously higher, might get a bit scary at these levels, but fundamentally there's just no reason why gold shouldn't go up, together with the extreme stimulus as well as with the dollar weakness that I still expect to continue. Last but not least, this is the real shocking chart here, that's silver. I did show both monthly gold and monthly silver charts in the past, and I made the point that if you see gold already trading at new highs, and then you look at the silver chart, there's quite some catch up to do for silver, and it seems the market has figured that one out as well. If we compare July and August together, gold rallied 12%, silver rallied 40%. And if you look at where we are compared to the highs 2010, 2011, you can't really put it past it that this extreme rally has legs and can still continue. So this is it really for me. I expect a small correction in the dollar ahead, but the real trend, dollar downtrend, is going to continue into the next quarter and into year end. Thank you very much indeed. Have a lovely weekend. Bye-bye.